Well, clicks are toppling bricks. An astounding 75,000 more retail stores need to close across the U.S. as e-commerce gains traction. That's according to a new report by UBS. So what this means is that for every 1% increase in online penetration, 8,000 stores need to close. Joining us now for more insight on this is President of Walser Wealth Management, Rebecca Walser. Rebecca, thank you so much for joining us today. So I want to get your take on what's going on in retail and UBS's recent note. So my big question is there a future for the brick and mortar stores out there, or is it all about e-commerce going forward?
Well, let's put this in perspective, Seana. So this is UBS's analysis that says, okay, if by 2025 we get 9% more penetration in the e-commerce sector. So basically, all of the sectors moving to e-commerce by 9% more over the next, basically 7 years. So it's a little bit more than 1% a year. What does that look like? And then they sort of break down 75,000 store closures, sort of by sector. 21,000 clothing stores, which is the largest hit, obviously home furnishings, consumer electronic stores like a Best Buy. So what's happening is it's a natural progression, right, Seana, of what is actually happening with the consumer. We are looking for convenience and we're going online. And one of the really interesting parts of this study was the grocery store, because I think that's probably a sector that is newest to the e-commerce function. There are only 2% market penetration is on e-commerce. And what you see is if grocery stores grow by 8% over these next 9 years, we would have 7,000 grocery stores closed. And so what people have to start realizing is we're moving to this e-commerce sort of sector. It's going to take time, but that is going to mean less convenience. And I think the winners are going to be ironically, Gap is obviously already telling us we've already had a projection of 5,000 stores closed this year. Gap is among the ones that are getting really hard hit. But I found that Gap and their kind of hybrid model where you can order online but pick up on the way home is something that's great, because I know myself personally, I get really irritated when I need to get something and I don't want to wait a day for it to be delivered.
Yeah, I'm with you. You want everything right away these days because we've become accustomed to it. So that certainly is something that is impacting the retail sector. Rebecca, I want to switch gears a little bit and talk more macro picture. We're getting ready for earnings season to kick into high gear. A lot of analysts out there, a lot on the street are expecting earnings to slow, not just in the first quarter, but also for 2019 overall. We got some readings out or some recent notes from Citi, for example. They're saying that an earnings recession will likely be avoided, but they're expecting EPS to contract 2.4% year over year in the first quarter. Bank of America was also out with a note. They lowered their 2019 EPS forecast by 1.2%. I'm curious, what are your expectations and how do you see this playing into the market's performance in 2019?
Well, I think even your last segment when we're talking about IMF today coming out with its third revision in 6 months downward globally, and the U.S. downward and Europe downward, I think that China is the only one that's not looking horrible right now. And obviously the trade is another whole issue with that. I 100% agree with the last segment where we have to lower expectations. We've had such a great run, Seana, and that gives us the lens of great expectation, almost so to the point of irrational exuberance, to put it in Alan Greenspan's terminology. So it's interesting, if you look at the 2.4%, that's kind of a consensus of a contraction on EPS. If you include historical beats, it actually can be positive. So if we're getting these historical beats, we might have positive EPS, but I am sort of expecting that we will have, we will be looking at, a negative 2% plus, around that. And then as far as, earnings and margins, that's looking like we're not going to have a really great time there either. And I think that people just need to understand that we are sort of, as great as our economy has been and as great as the fundamentals look, if you look at the inverted yield curve, that's indicating, if you look at the global slowdown projections coming, as much as I would love this bull market to continue indefinitely, reality is, just the laws of gravity, what goes up in the economic world must come down. And we are in a very, very aged position here. So we've got global numbers that are showing that we will have an impact on our quarters. And so do I think a recession's coming for 2019? I don't want to say that yet, but I do think we should be prepared for numbers to not be what we have seen the last couple of years.
Let's lower our expectations. That's the theme,
I agree.
At least for today.
Yes.
Rebecca Walser, thank you so much for joining the show.
Thank you, Seana.